welcome out to Tackle Trading's YouTube channel and our show, the Halftime Report for today, Wednesday. I got the great Tyler Craig here, and if you're new to Tackle Trading, make sure to hit that subscribe and like button as we go through the Halftime Report. And if you like what we do at Tackle Trading, you enjoy our YouTube programming, go over there to tackletrading.com, check out the pro membership, and you get a 15-day free trial over there at tackletrading.com. Just simply hit the storefront. With that said, Coach Tyler, how you doing today, my friend?
Doing good, Matt. Excited as always to be here on a hump day. Got a good Jedi Options segment, and market's interesting today. We got some divergences, some interesting rotation going on, so lots to talk about.
You know, we've been talking recently about how when the market does reverse and it starts to really kind of move, it starts to move in line simultaneously with one another. You see very similar price responses to the markets quite often after strong reversals, and that's what the S&P, the Dow, the NASDAQ, and most of the major market indexes did. Over time, as stories come out, the markets start to get impacted. You start to see a little bit of separation. Today, I want to start with getting your read from a technical perspective on the market indexes. Are you seeing the same things that I'm seeing? Are you starting to see a little bit of separation? And let's start with the price response in the S&P 500 here, Tyler. What's your technical read on the S&P?
Well, look, I think when you have the S&P, let's call it unchanged, right? Zero, yeah. Right? Like so it's almost like nothing's going on today when you look at the S&P. What that tells me is you have to look underneath the surface, because it's like the S&P is not showing you any cards, right? Because everything could be flat. Every sector could be zero today, or half could be up a ton and half could be down a ton. Like, you just don't know how we got to this unchanged, right?
Yeah.
But it does tell you, I mean, even if we do have a bunch of sectors that are going down, what does it mean that the S&P is flat on the day? It probably means that it's more rotational in nature and less like they're selling everything, right? So if you want just like a shortcut analysis, look, we're fine. Nothing's changed. Nothing's changed. The S&P is still in this record territory. You got a couple of dojis. It deserves it. It's gone from 4,300 to 4,550. I mean, from a swing trading perspective, you'd normally expect a bit of a pause here. I'm actually impressed that you only had one doji when we hit resistance, and then you went right back up. So I don't mind some backing and filling here. But as I said, this doji does not really tell you what's going on underneath the surface.
No, and underneath the surface, you certainly are seeing the market separate just a little bit. And a lot of that is due to some very positive earnings responses out of Google, number one, Microsoft, number two. We'll get into those here in just 1 second. But before we do so, let's go into the NASDAQ, where you are seeing a little bit of an upward movement in price relative to some of the other indexes here today. Russell 2000 down close to 1%. S&P dojing, NASDAQ up close to 1%. That's that separation we're talking about on the backs of some really strong earnings reports, specifically out of Microsoft. What's your technical read here as we fight against the breakout channel?
Well, I think the interesting thing, let me pull over this gridiron to just put some meat on the bones of what you just said. You have energy and financials getting torched today. That's weighing on small caps, which is IWM. And then you have the tech leading. Remember that tech actually hasn't been that great the last couple of months, right? It's been a story of energy and oil. It's been a story of banks and rising interest rates and inflationary pressures. Those have been leading. And today it's like the opposite, right? So it makes sense. I mean, what would bring buyers back to tech, right? Where tech is now a leader as opposed to energy and stuff. I think it makes sense that you're seeing profit taking in these areas like energy and financials that have run so much, and that money, instead of flowing out of everything, you're just seeing a shuffling of the deck back into tech. So that to me stands out. And in regards to that, tech is playing catch up now, right? Like it was underperforming quite a bit on the pullback in September and October, and now you're back up to testing all-time highs, right? Like this is essentially what the S&P looked like 3 or 4 days ago. So it's healthy to me. I mean, if this does what the S&P did, it'll break out. You've got some big tech names coming up. We still have Amazon, I think. We still have Apple. Right? So maybe those will be the next ones to if they pull a Microsoft and a Google. What do you think this is going to look like in the next 2 days?
Well, and that's the thing. I mean, we've now seen a few of those big dogs report. Tesla comes out last week, just absolutely destroys things. We've seen, go ahead and pull up their chart real quick. You've seen the explosive growth following an amazing earnings report out of Tesla. And then you obviously had the Hertz news over the last couple days that gave it a little bit of an additional ump there. You've seen Google report now. We'll cover their earnings here today. We've seen Microsoft report. We'll cover their earnings today. All of these had gangbuster earnings reports. They came out. They not only beat the expectation, I'm very impressed with the size. What these companies are doing from a growth perspective versus the size of their company, you just got to be very impressed. And now you're coming into Apple, and so far out of all the big dogs out there, the only one that has not came through was Facebook. That's the only one that has not came through, and obviously Facebook has its own unique challenges that Google, Apple, Microsoft, and some of these other big dog trillion-dollar companies, they just aren't fighting those headwinds that say the Facebook is fighting right now. So you are seeing a little bit of separation from a NASDAQ perspective. What about within the Dow? The Dow's going to have some of those same components that you talked about with the Russell 2000. You have a lot of staples, energy, finance there. Dow's overextended here, a little underperformance today. What's your technical read on the Dow?
Yeah, so this is probably a good I don't know, emblematic or maybe a good proxy for the profit taking you're seeing in some of those old name areas. But here's the silver lining. Did you really want to buy up here anyways?
No, I want to pull back.
Yeah, like were you excited?
Let's all be real. Let's all be honest with each other for a second. As a trader, not as an investor. Investors, our fundamental belief is over time. But as a trader, with where the S&P and the Dow are at right now, don't you want some consolidation? Don't you want a little bit of pullback? Don't we want to see those patterns reset themselves a little bit? I don't see anything happening today, Tyler, as a negative, quite frankly.
No, and so I just counted
from an index perspective. 100%. There are individual stocks, but from an index perspective,
yeah, this was up 9 out of 10 days. You know, Crimea River, it's down 0.3.
Well,
you needed a reset.
And Ty, what does that pattern look like if you do get one of those traditional retracements coming back into 35,000 on the Dow Jones?
Well,
I think
like a nice little bull
that looks like it's going to get gobbled up real fast, doesn't it?
Yeah.
High base on the S&P. You're seeing a little bit of pullback analysis in the Dow Jones. NASDAQ showing some strength today. The Russell 2000, we've talked about that 2,300 level by 2,350, 2,360 many times. Technically, held yet again. Context really doesn't matter. We can talk about the banks. We can talk about the energy. But again, held yet again. What you read here?
Look, maybe we should all just do condors for the next 10 years. Okay. Like this does not want to get out of this range.
Listen, if you want to cash flow 10% monthly, I can sign up for that one.
Look, it's been working, and who am I to fight it? Yeah, just put it off for another day. I mean, look, even I don't know, man. I don't know. Eventually it'll go, but it's a pretty deep retracement. It does kind of reset it, though. It does kind of say, okay, you know, if I do break, it's going to be a bit from now. So I think the hope for me is that, you know, the dip in energy, the dip in financials, you know, those get bought. Eventually money rotates back. Maybe
I do think you had that nailed when you said that earlier today about, yeah, the Russell 2000 is coming down. A lot of it's on the backs of energy, on the backs of finance. Let's go take a quick peek and look at those sectors, because you can reset these technicals fairly quickly. XLF starting to show a little bit of a pullback here. Nice. Again, if we see another 2 more days down like this, coming into some major support levels, I think that looks very attractive at that point. When you're taking a look at energy, energy's been one of the best performing sectors over the course of the last couple months. Just been one of those high flyers, showing a little bit of increasing volatility here. But once again, let me ask a very simple question. Have we violated a support level yet?
No.
We have not yet to violate a support level. So let's paint a scenario here on the Russell 2000. which has a lot of these two sectors in it, correct?
Yeah.
Finance and energy. Are you changing your fundamental view of these sectors based on today's price action?
Oh,
Your
no, because
bias.
nothing fundamental has changed. So
Exactly.
you
Okay.
can't.
Me either. Me either. And so if these two sectors pull back a little bit, let's say energy consolidates, waits for that 20-day moving average to catch up. Let's say finance, gives us a nice little flag, gives us a nice little retracement. Both look to be viable scenarios. Doesn't that, as those two patterns work themselves out, doesn't that also mean the Russell 2000 most likely increases support as it makes that next run to 2300?
You would hope, yep.
So again, yeah, the Russell 2000 held yet again. But again, it held in an environment where major sectors were overextended as the Russell was also coming into that major resistance point. Let's see that support level build, and let's give that another run. I don't think it's over yet. I still think it has a chance to break out.
I preach, baby.
I don't want to preach too much. I don't want you to get too excited about it. I'm just saying it's not abnormal to see an index hold resistance when the major components of those indexes are overextended.
Well, and look, let's be honest. You want to go sideways another 6 months while earnings keep creeping higher and higher and higher. Look, your valuation gets better as the longer you do this.
It does.
That's fine with me.
It does. I agree with that. Now let's move on. Let's talk a little bit about the commodity market here, and let's take a quick peek. And let's start with crude oil. We were talking about energy pulling back a little bit. From a technical perspective, give me your read here. This is one of those moments where you have a little bit of increasing volatility. Nothing to get too caught up in, but give us your detailed technical read here on the crude oil space.
Yeah, I was just going back to see. I mean, us being at a level we haven't seen since 2014, you kind of have to go, if you care about previous levels, you have to zoom out quite a bit right now. I had a line at 85. I just want to see where it was from. I don't know that it's all that significant. I think that making the case for a pullback is less, hey, we're at major resistance levels, and more, dude, you're due. Come on. I think anytime you get 1, 2, 3, 4, 5, 6, 7, 8, 9, 8 out of 9, almost straight up.
Weekly candles.
Weekly bars. You went from 60 to 85. Come on, man. We've seen this movie before. Not surprised at this little plot twist. And remember, pullbacks make trends more sustainable, and they prevent deeper, nastier corrections down the road.
Yep.
Yeah. So ultimately, it's fine.
So just to clarify, on the weekly chart, we got an overextended situation on the weekly chart. What about on the daily chart?
Yeah. So on the daily, you're pulling back a little bit, but honestly, the last couple of times this has shown some red bars. The dips have remained shallow, right? So whether it's a shallow dip or a deep dip, I think I don't care. I'm just wanting to buy on the dip. I think I mentioned this to you and Mark on Monday. Mark's already in on some stuff. I went on vacation. I'm not in on this. I'm on my pullback. You
want some love.
Yeah.
You want some love. This pullback. So basically, once again, multiple time frame analysis here. Weekly chart overextended. Daily chart, little bit of a high base scenario. A little bit of a high base, consolidated high base, maybe work itself out a little bit over the next couple of days. Intraday, there's one key point, one key level I want to kind of track on an intraday basis. And if you look at it on a third, let's go 30. If you look at,
sorry, hang on.
Goldman's fighting up against that 420. When you look at the 30-minute chart, that $81 level, multiple ticks down at that level. That is the intraday line in the sand that I think the traders are really kind of tracking. A lot of volatility here early today. Obviously, downward movement in price. 85 held multiple times at resistance. Looking for this pullback from the intraday level. Find support at 81. Then let's work our way back up. But I feel we have a little bit of more volatility in this intraday chart until we really find some degree of intraday support. And that, to me, there's minor levels above 81, but that, to me, 81 really stands out on the intraday level.
Yeah, and it'll correspond with the rising 20 MA as well. And ultimately, you don't want a 1 day pullback anyways. If you're not in,
No,
you want a
two,
2 or 3
3 day.
or 4 day pullback.
Yeah,
Yeah.
2 or 3. I like it. I like it. Let's move on to gold very quickly. GC here broke back up above 1800 earlier this week, fading down a little bit. Hammer candle today. Tyler, we've been talking about gold at 1800 quite a bit over the last couple weeks. Been asked the question, for a long time, that 1840 level was where we were tracking, right? Was asked the question last week. Has anything been updated? And I said, yes, I am looking at that 1800 level as kind of that starting point on the bullish uptrend. But again, the real action for me still starts at 1835 but 1840. Do you agree with that, though, that 1800 can be significant from a bullish price threshold perspective?
Sure. Yeah. And here's the thing. It's like, do you want to wait till 1840 to start to get more optimistic, or do you want a quicker signal? So if you're looking for something to get you a little more optimistic sooner, then I think 1800 makes sense. I do like that gold's up today when other things are down. It just speaks to the rotational stuff, right? That not everything's getting whacked today, which is nice.
Yeah. And last, certainly not least, nope, we're going to do 2 more commodities actually, but let's take a look at Bitcoin here. Was asked a question last week, by Mark. Matt, where can this retracement come into? And I said anywhere from 60,000. I even said this. Nobody's going to like my answer. I even drew a Fibonacci. Anywhere from 60,000 to 50,000 is where that retracement can come into. It fought for 60K. Never confirmed though. Never confirmed. Gap down in price, coming underneath the 60K, coming into that 20-day moving average, which can be a nice little standardized bullish retracement type momentum support zone. What's your read on this now more traditional bullish retracement in Bitcoin?
Yeah, it's interesting. You'd like a cleaner pattern if you could have got it, right? It's never fun when it tries to go up and then comes back down.
It fooled the day traders.
Well, and to your point, of not confirming, if you're using if you're waiting for the break of a prior bar's high, that's what Matt's talking about.
Yeah.
You had a green bar, but it didn't take out prior day's high, right? So if you waited for that confirmation, you didn't get suckered in. But from to pick up on your retracement perspective, yeah, I mean, look, you ran from 40K to 68. You can like this is a garden variety pullback from a percentage perspective, right? It's fine. Today is a hard bar to trade off of because you have a really wide bar. It doesn't really lend itself well to a trigger. What you would like to see is another bar or two that's smaller than today to maybe set up a better entry. Show that buyers are coming in here at this 20 MA. This is not a bar that I would place trades off of, for sure.
No, and I certainly agree with that. You need to start with some type of slowing momentum here. Whenever you're dealing with a traditional retracement analysis, I always like to look for slowing momentum. And slowing momentum can be looked upon 2 different ways. Number one, you can look at the size of the candle, and today is an increasing momentum candle to the downside. So that's not going to give any credibility to any bullish trade right now. And then you look at the vertical distance between the wicks, and that's even worse than the actual size of the candle is right now. And so right now, bears certainly do have control. And what you want to see in this environment in retracement analysis is you want to see bears start losing that control. You want to see the bulls start to come in, offset the price action, and that's where those slowing momentum candles certainly come into play. And what you want to do is you want to prepare yourself for where those levels could form, where that slowing momentum, where is the most likely occurrence of slowing momentum to occur? Previously well-established known levels of support. And so you're looking at that 20-day moving average at this point. It coincides with a historical old resistance, but you're also talking about retracements. You don't get to pick where support forms. You can just prepare for it. It's the market that actually defines support. And whereas 2 days ago, you had a green candle. One green candle isn't support. Support is confirmed through pivot confirmation. And pivot confirmation takes 3 days. We need 1 day of confirmation as traders to assume we're going to get that pivot confirmation.
Yeah.
One green candle that never even goes above the previous day's high is not confirmation. That is day trader analysis, not swing trader analysis. And so you want to understand that confirmation, because if it doesn't confirm, it's still just a 1 day reprieve in an overall downward movement in price. That's what we're seeing here. We gotta wait for support to build. And yes, you absolutely, it does look like what Bitcoin tried to do 2 days ago. That's what it looks like. You see the double bottom come in. You start to see support on an intraday build. But again, it's got to come through the conclusion of the story. And the conclusion of the story is confirmation. We never saw that. It never went above the previous day's high, never closed. Bears still have control. You got to wait for that to occur again. Because in retracement analysis, there are multiple levels where this can and will form. You have your momentum-based ones like flag-based patterns that come into 9 EMAs and 2-day downward movements in price. You have your traditional retracement analysis that comes in, 38 to 61% retracement against the previous movement that has the 20-period moving average in it. Oftentimes it will have the 50-period moving average in it. All of these levels are hypothetical catalyst of support, but they also have to be confirmed by the marketplace. Where can that next level form? Honestly, right now on Bitcoin, but you got to start seeing it happen first from an intraday, and I just don't think we're there yet, Ty.
We're not. I do like this level though. I mean, there's a lot of reason why buyers could show up here. So it's a level that bears watching, but you need evidence.
All right. So crude down, Bitcoin down, gold slightly up. Let's go to HG. I've been looking at that FCX breakout, talking about the retracement analysis here. Another big down day in HG. I'm still looking at retracement analysis, very similar conversation that we had on Bitcoin. Saw that slowing momentum over the last couple of days. Really, really liked that slowing momentum over the last couple of days. Never really saw that confirmation. Downward movement in price. Now we're in between a 20 and a 50 moving average. You're also coming into that deep retracement analysis here, Tyler.
Mhm.
This is one of those, unlike whereas Bitcoin just filled the momentum support level, it's got about 4 other support levels to test before you're done with retracement analysis. Not necessarily the case on HG here. You got to hold at this point. You got to hold. What's your read here, Tyler?
Yeah, 100%. And it is disappointing. I have a lot. I'm trying to order the thoughts here. Let me go straight for the chart here, then I'll talk about the implications. What Matt's saying is, if this breaks the 50-day moving average, forget it. Like, it completely invalidated this breakout. And it's ugly. You don't want to see that. You don't want to see a glorious breakout with massive volume, and then you retrace 100% of the gain and you give it all back. That's not a trend. That's just a complete and utter rejection of the attempt to get into a trend. So $4.30, $4.32. Like, if it breaks that, it's like, copper, what are we doing here? Like, I thought you were going to start an uptrend. If that was the case, you should not have come down this far. It's unnecessarily messy. So it's knocking on the door, Matt. Like, it essentially needs to bounce in the next 10 cents. If it doesn't, it's really ugly. It's really ugly. And this bar is not what you want to see. It's increasing in momentum. What I was going to also mention from a sector perspective is energy down, financials down, small caps down. Basic materials is the third worst sector today, XLB. Now, I still like the chart, actually. The chart looks great.
I love the chart. And honestly, I still like FCX. It gapped down. It's doji throughout the day. It held support. It just hasn't. And the breakout channel was 39 by 40 there. And so you really haven't broken anything. You haven't broken trend. You haven't broken pattern. And honestly, copper hasn't broken trend or pattern yet either. Okay. It's got to hold now.
Yeah.
Like, it's got to hold. And so if you don't hold here, well, guess what FCX does? It breaks that too. And so you're at one of those positions where it's like, and honestly, I like these because it makes decisions easy as a trader. Either one, it holds or it doesn't.
Yeah.
If it holds, you're triggering. If it doesn't, you're moving on to the next instrument.
And this whole space, Alcoa is one I've been watching, just falling out of bed today. It's gross. It's gross.
Yeah.
Particularly after. This is like what you don't want copper to look like, where it's like breakout, high volume, looks fantastic, and then what are we doing?
Well, and Alcoa gave us confirmation.
It did.
I mean, they wanted to do one worse to us. They gave us confirmation, then said, "Oh, we were tricking."
It's tough. It's tough. So
Yeah, it's a
let's
tough
root
one.
for copper to hold.
Oh, we're all rooting for copper to hold, no doubt. I was in the Step System Mastermind group on Monday, and I said, I just think life's better if copper's doing good and everybody's making money on FCX. Just life's a better place there.
Truth.
But in one of those retracements is copper. Now, Tyler, let's move on, transition into earnings roundup here. I got a lot of earnings, and I'm going to rapid fire their numbers. Tyler, you're going to give me your quick take analysis of what you oftentimes in earnings reports, there's nothing really to see technically. If there's nothing to see, just say, Matt, there's nothing to see. If you see something, you're waiting on a secondary pattern, you see something on momentum, give us your read there as well, okay? So let's start with the big dog here today, and that is Microsoft. Microsoft comes in and shows what's up to the entire world as this $2 trillion juggernaut reports $2.27 against 206. Revenue came in strong at 45.3 billion versus 44 expectation. That resulted in this behemoth of a company increasing net revenue year over year by 22%. We're not done because Microsoft wasn't done. They said we're also going to do better next year, so we're going to increase guidance for next year. And then when it comes to Microsoft, the all-important cloud-based business, that came in at a whopping $20.7 billion. Congratulations to Microsoft for hitting that record number for their cloud-based business. And with Microsoft growing at 22% net growth year over year, their cloud-based business grew at 36%. Big time quarter coming out of Microsoft. Everybody else warning about supply chain stuff. Everybody else warning about inflation. Everybody else warning about whatever they want. Microsoft says, you guys crying, everybody spilled milk. We're just going to go do a good day's work here. Microsoft did a great job. Technically, Ty, what's your read here?
The chart looks fantastic. It's always impressive when a company has gone up as much as Microsoft has gone up. And then they're like, look, you didn't give us enough gain here. Like, we're so good on the fundamental side that we deserve another 5% overnight. It's just impressive. I'm going to run the number here because I'm curious. S&P is up like 22% on the year.
Yeah.
We're now 325. Well, at the peak, 325.40. This thing started the year at 322. It's bananas. It's up like 47%, like doubled the S&P 500 return. I'm impressed. I mean, look, you could say, hey, it's a little extended, but it means something when a company that's gone up as much as Microsoft is still able to go up 4.5%. Yes, it's a little extended. Maybe it needs to pause or pull back. I certainly wouldn't go all in right here. But I mean, what do you want me to say? Like, I think it's bullish on all time frames.
I think Microsoft's an investor story. That's what I really think. It can be a good trading company. Don't get me wrong, and it can be a good position stock as well, and it's a wonderful covered call stock. But I do think it's an investor story because I think that's what everybody looks at Microsoft as perhaps the number one investment in the world right now. And so that's how I see it. And so I feel like when Microsoft comes out and they do what they did on the overnight, it's going to give a lot of investors a heck of a lot of confidence moving forward.
Yeah. Well, and just to reiterate and be like, look, how many other companies do what we do? It's like, okay, I want to buy you on the dip. Like, you're my permanent buy on the dip stock. I got a question on the fundamentals. How old is the growth, or not growth, the cloud part of their business? I mean, that's only a few years old, right?
It's about a 7-8 year story. Yeah.
Okay, 7-8 years.
Now it's really only been like the last 5 where it's been becoming a major component of Microsoft. But again, Microsoft was a nothing burger of nothingness for 10 consecutive years in the 2000s.
I remember. Yep.
And they were really struggling the same way circa, think Intel today, think AT&T in the 90s and 2000s. They were really, really struggling. Microsoft post-subprime market reinvented themselves. They established the cloud-based business. It became a growth storyline to Microsoft. And all of a sudden, people started seeing Microsoft not as a computer company, not as a, but more as a service and a cloud-based business. And then the investor money was attracted to the growth storylines. And so every company is trying to repeat this. IBM is trying to repeat it, but you can't repeat what Microsoft has done. Microsoft is an entity in and of itself. It's an amazing story. There's no doubt over the course of the last 12 years, and it looks like they just want to keep on. Honestly, it just reminds me of what Bill Belichick tells the New England Patriots all the time. Do your job. Just do your job. That's it. Just show up at work and do your job. Microsoft shows up to get the job done, and they do great work. It's a great report out of Microsoft today. Let's move on. Google. Microsoft said, we're going to make a lot of money. Google said, we're going to make more money. That's what we're going to do. Google comes out and they report a whopping 27.99 per share versus the expectation of 23.13. They then came in with an amazing revenue number of 65.1 versus 63.3 on the expectation. That resulted in a 41% increase in revenue year over year. For Google, though, what the real storyline here is ad revenue. You're seeing it with the social media companies that are in the communication space. Go look what's happening with Twitter today. Go look at what's happened with Snapchat last week. We all know the storyline of Facebook over the last couple of weeks. Here's Google says, we're going to set record for advertising revenue. 14-year high here for Google coming in on ad revenue, and they look towards better guidance in the future. They don't provide official guidance, but the commentary was positive on a guidance perspective. Google looks like it is breaking everything here today on a no sell day, not even necessarily a gap and run here, Ty, just a run after the cash open. What's your technical read as we're breaking out of short-term, intermediate, and primary resistance levels?
Well, the fascinating thing you hit on, it didn't gap at all. Like if you looked at this after hours last night, you'd been like, oh, fantastic numbers. Looks like it was priced in, right? And then the market opens and bulls come running. This entire 6% gain has been post cash open, which is mighty impressive, right? Which is mighty impressive.
Well, it's not like they saved the conference call for this morning right before the market either. Like this was all cash open. It attracted momentum built. It was impressive.
Yeah. The chart's fantastic. And in celebration of this chart, this is going to be the focus of the Jedi Options segment here in a few minutes. So we're going to investigate a trade on Google.
Okay, we'll save the technical scenario till then. Let's go into the tech sector. We started with Microsoft. Let's go into AMD here, Advanced Micro Devices. Whenever AMD is on a tear, and AMD has been on a tear following that reversal, by the way, that was nailed by tackle trading, both in the halftime report and on the options report. But I don't have to brag on that one. A lot of people have been in that one. So in terms of AMD, though, when you made such a run like this, man, AMD's got to produce results. They just have to produce results. And quite frankly, anything that maintain price action, I think you got to take away as a positive on AMD. They're doing that here today on the backs of what I feel is a very good report coming out of AMD. 73 cents against a 67 cent expectation. That's a very good number for AMD. Revenue, though, coming in at 4.3 billion. Expectation was 4.1 billion. That's a 54% yearly increase in revenue. And they also raised full year 2021 guidance as well. Didn't provide 2022, but they did raise full year revenue guidance. This is a beat and an increase in guidance. What's your read here from a technical perspective as AMD comes out and produces results?
Yeah, the challenge with AMD is just that it ran so much into this. I mean, this was up 25% in the last month coming into the number. And so unlike Google, which hadn't done anything for the last 2 months and then puts up a smashing number, just a lot of it was priced in on AMD. So you just kind of need a reset. You need this thing to pause, pull back. The last two bars make it really hard. How are you going to set up a trade based off today?
You can't. There's no trigger. It's a
Yeah.
really difficult trigger there. I mean, even intraday wise, there's so much chop there. I just feel like AMD is one of those scenarios post earnings where it doesn't even matter. You're always waiting for secondary
Yep.
patterns to develop on AMD. And right now, whether that's a high base over the next week where we play a little defense up at the highs, or we see some type of flag or some type of pullback, whatever that pattern is, it's got to form. Stay with us because we will be analyzing it as it does. Let's move on to another semiconductor giant, and that's Texas Instruments. And unlike AMD, Texas says, we got some concern here. They came in with an official beat on EPS, 207 versus 206, but revenue, unlike AMD, remember AMD had the $200 million beat on revenue. Texas Instruments actually missed by $100 million, came in at 4.6 billion versus the expectation of 4.7. AMD year-over-year revenue up 54%. Texas Instruments revenue up 21.6%. And doesn't it make it a lot easier when you're comparing like candidates? Here you start to understand how those numbers really start separating themselves.
A
It,
hundred,
ma-
a hundred
it
percent. And
matters.
yes, well, and 20% year-over-year growth is not too shabby, but the stock
No,
price has been up a lot. So
well, and it's also semiconductors. We expect growth out of semiconductors.
true.
That's why they justify high valuations. It's
Yep.
simple. You got to grow, and when you don't, you see this type of movement. Despite the what do we got? We got a slight miss and a slight beat. Right, that's what we have right here.
Yep.
Also increased dividend by 13%. Okay, so we got a little hot, little cold so far in the reporting numbers. But in the reporting numbers in comparison to AMD, this is not very good in comparison to AMD. The biggest problem here for Texas, though, is something AMD didn't do. AMD actually raised their full year guidance just a hair, but they did raise it. Texas warned of supply chain problems coming down the road. And one thing we have seen from the very beginning of earnings season, if you warn of supply chain problems, you get punished. Texas Instruments warned of it, and yet again, they got punished.
Yeah.
AMD didn't, Microsoft didn't, Google didn't, Texas does, they get punished. Now let's move on to Visa, because you're seeing the same thing happening in Visa here today. Revenue came in slightly above the expectation. EPS came in slightly above the expectation. Revenue grew 28.6%. So let me give you some raw numbers here on Visa. 162 versus 153. That's a decent beat for EPS for Visa. Revenue 6.6 billion versus 6.5. That's a decent beat on revenue. Revenue grows 28.6% year over year. That's a decent. That's very impressive for Visa. But where's the problem then? Why the gap and run? What did they say? They do not provide guidance. Visa doesn't. But in the conference call, what occurred was they were asked a question on guidance, and they said, we expect our growth to be in the high teens next year. Well, guys, if you're growing right now at 28.6%, and next year you're only supposed to grow at 17, 18, 19%, and you're warning of supply chains, that is headwinds coming at it. Investors aren't going to like that. That's what's occurring in Visa here today. Now we got to look for support to really kind of build time. Do you see anything? This is a concerning earnings number. Even though the guidance is not officially provided, we can do the math on that one. That's a 33% decrease in guidance. So in terms of that, what's your read here on the conservative guidance view?
Well, the first thing, as far as the chart goes, is Visa is not an easy stock to actively trade. It's kind of an investment. You either like it to long term, or I don't know. Like, this is a tough chart for me, just in general.
Yeah.
This is terrible in the short run. It looks hurt. I mean, I
A
don't want to.
lot of it's on the
sell this.
financial. Well,
I don't know.
you're seeing a little bit of the financial sector coming down, though. A lot of that's due to what Visa's doing here.
That's a good point. That's a good point. And there's so many better looking banks right now.
Tons.
Why
their
would you bother
pullbacks are their pullbacks are coming into support from a
Yes.
bullish perspective, This is like, oh, you better hold or look out below type scenario.
100%. Yep.
Yeah, I think it's a stay away.
Yep.
Just there's too many better alternatives to Visa in the financial movements right now. Let's move on to some of the reports that came out earlier. Twitter, TWTR, saw Facebook yesterday, saw Snapchat the day before, late last week. Well, Twitter here following suit. Little bit of a difference though. Twitter did try to say they weren't Facebook today. They did try to say that. They said, you know what? We weren't impacted by Apple's privacy policy. Now, again, Apple's privacy policy is the double confirmed to get ads from advertisers. Well, Twitter says we weren't really impacted based on that. What they were impacted based on was they were expected to come in at 15 cents, and Twitter decided to report negative 54 cents. That is a massive, massive miss on EPS for Twitter. Revenue came in light, in my opinion, 1.3 versus the 1.3. Revenue did increase 37.1% year over year, but this is a massive miss on an EPS number with a stock in a space, i.e. the social media companies, conglomerates, that honestly not a whole lot of people want to touch right now. Twitter's a stay away the same way as it is for Facebook for me. What's your read here, Ty?
But let me geek out on the fundamentals with you for a second.
Yeah.
How did their revenue come in line with expectations, but they missed so poorly on EPS? Did they have like a one-time cost of something, or what?
I didn't dive into the revenue numbers, but typically these are write-off costs from, like for example, Halliburton had a write-off cost on pensions to the point of billions and billions. That wouldn't be Twitter, but it could have been acquisitions. It could have been other things. But yeah, they missed gravely, but did come in line.
Well, and I think that's I just on a side note, I think that's interesting. Like context
Or Jack
matters.
Dorsey got his bonus. I mean, maybe that.
But it screws up like your quarter over quarter analysis because it makes it look horrific. Like, what the heck happened? You made 38 cents, you made 16 cents, you made 20 cents, then you lost 54. Like, anyway.
Well, and they also said that they had some concerns for the fourth quarter as well. So, and again, they didn't have the drop-in guidance that Facebook had yesterday. They didn't have the drop-in guidance that Snapchat did, but saying the same, because they don't really give us a detailed guidance. So they did hint towards some of the same concerns. This is just a space that is completely out of favor by the market. And this is a space that is taken on storylines that are typically not market storylines. And when that occurs, I don't think it's a good space for anybody.
So why bother? The chart looks like garbage. I like this. I hate this even more than Visa because it already broke major support. It's below all the MAs. And it doesn't really have much till $50. I mean, this can go down another $6 here.
Another 10%, like nothing. Yeah. Now, again, $50, a different price threshold. Maybe see some double bottom. Maybe we start getting through some of this. But as of right now, this is just garbage. Just absolutely trash of a chart. And I say that with all the respect it deserves. It is a trash of a chart type scenario right now. Let's move on to another terrible report coming out of a popular name here today, Robinhood. Robinhood has not had many earnings reports in its short history, but they haven't been very impressive so far. And this one was I was extremely unimpressed by this report. And let me tell you why. Number one, Robinhood was supposed to lose $1.37. They lost $2.06. That's number one. Number two, Robinhood was supposed to make $424 million. That's going to be important here in a second. They only made $365 million. We saw contraction in almost every single aspect of Robinhood. In almost every single aspect, from crypto revenue to options revenue to equity revenue, including a drop of 70% in crypto trading revenue at Robinhood. Robinhood also warns that that could happen again for the fourth quarter. Okay, those are your backdrops. Robinhood then provides guidance. Now, mind you, they were supposed to make $424 million this quarter. In their guidance report, Robinhood states, we will not make more than 320, what was it? 325 million.
Next quarter?
Next quarter. We will make no greater than 325 million next quarter.
It's always good when they put a cap on it.
Tell me last time you've seen that. We will make
Listen, no matter how good it gets, no matter how good we execute, we promise we are not going to make more than this.
There is zero chance. We weren't as good as we were expected to be this quarter. We weren't as good as we were expected to be last quarter. So what we're going to tell you ahead of time is we're not going to be good next quarter either. So you guys have fun with that. This is a terrible, absolutely horrific report coming out of Robinhood. Don't know why anybody would have confidence long term right now based on these fundamental metrics. There's just nothing to hang your hat on other than, wait, we're at IPO pricing, which again, Robinhood just said today, we're not growing next quarter. And we're not going to make a penny over $325 million next quarter. It just seems like a good luck out there type scenario with Robinhood. I think you got to see something a little bit more than what is being said from an earnings perspective. Technically, this looks like garbage outside of its at IPO pricing. What's your read, Ty?
Well, so let me be the contrarian. Maybe they just threw in the kitchen sink, Matt, and they're like, look, let's lowball the crap out of this.
You're right. Okay, fantastic. Throw in the kitchen sink. I don't want to throw in anything with you. You threw the kitchen sink and you're only going to make a max 325. No, get out of here with that.
Listen, this could be a scheme. Next quarter, maybe they make more.
Yeah, Robinhood is
such a good quarter. Put a pin in this. We're going to come back in 3 months and see how this little saga plays out. As far as the chart goes, you are correct. Look, what does it mean if it breaks 33 bucks? It means no one on planet Earth that bought this post IPO is making money. And that's a lot of overhead supply. That's a lot of potential sellers. It ain't a good look. I wouldn't mind this pausing here for a few days, digest this 10% down move, give us a nice little support break at 33. Might have a good little trade there.
That's kind of where my head's at as well. It's certainly, and again, technicals are very, very important to the market, and this support level is extremely important for Robinhood as well. And that's why it can attract a lot of buyers just from an IPO pricing perspective.
That's true.
What Tyler is suggesting is let's let that analysis work itself out, and then when it gets blasted, let's blast with it, is kind of what I'm hearing.
Yeah, well, and look what happened to Snap after. Well, conceptually though, it's hard to short it after the down move, like day of or day after, right? Yeah. I actually thought this looked a little better, but regardless, 2 days sideways, then down. Something similar, right? Where it digests it, then give me a fresh down move versus making me feel like I'm chasing down 10%.
I agree. Let's move on very quickly. Let's do these next 4 rapid fire style, all well-known names out there. Let's start with Coca-Cola here. KO comes in at 65 cents versus the expectation of 58. So nice beat on EPS numbers. Revenue came in strong. 10 billion versus the 9.8 billion expectation. That resulted in a 16% year-over increase in revenue. They also reaffirmed guidance here on Coca-Cola as well, which was a positive thing moving forward. You've seen a gap down, a little bit of a profit-taking session, though, as we've seen in a lot of aspects of the market here today. Ty, what's your technical read as we gap out and then just fade off after the cash open?
Oh, first question. I'm so bad on these handoffs, dude. You hand it off to me on the chart, and I'm like, no, I want to talk about something fundamental. Forgive me. Did I get a dividend bump on this? Any dividend increase?
I did not see a dividend bump on this quarter.
Oh, well, that's okay. They gave us one first quarter from fourth quarter last year, so maybe I shouldn't complain. I like the gap.
I also did not dive into Coca-Cola. I just got raw numbers on Coca-Cola here.
Yeah, you're good. I'll look it up. I like when a solid company that has typically good fundamentals historically. I love when its stock price gets whacked because maybe the sector falls out of favor. Mm-hmm. And then they have an earnings announcement that provides the catalyst to get it back into an uptrend. I just think it's a baller move, Matt. Right? I think it's like management coming out and be like, hey, bozos, lay off our stock price. We just made a ton of money, okay? Get us back in an uptrend right now.
So the market, by the very nature of the market cycle, right? Things go up and down, and there's seasonality, and markets move in line with one another. So the market falls out of favor. Coca-Cola comes down, earnings comes out, and it's the way the company reminding everybody, "Hey guys, we're bigger than the market. We're
Yes.
Coca-Cola here. Come
Yes,
on."
it's
Right?
like an Elon Musk moment with the short shorts.
If it was Elon Musk's moment, this would be at $100 right now. Like that, like Elon would pump that stock up a hell of a lot more.
I know. I just want a little. I mean, these are very non-sarcastic leaders of these big giant
Yes,
companies, right? They never do
yes.
that. But me as a shareholder, I'm like, yeah, see, bears, they make a lot of money. Don't take my stock into a downturn again. So I hope this sticks. I don't like that it is fading after the open. I don't know. I mean, look, I just like that it's back above the 50. If the fundamentals are sound, it just helps me feel more confident that the next dip gets bought.
Well, I mean, this is the first time in the last month and a half we've gotten back up above the 50-day moving average. The market reclaimed that level a couple weeks ago. You got some catch up against the market today, and yeah, we got a red candle after the cash open, but a strong gap on a strong earnings numbers as well. I don't mind the fade down here from an earnings price response perspective. In fact, I feel that could be tradable far faster than a gap and run up can
Yeah.
from a momentum perspective, given the fact that you're really looking at 55 here. You're really looking at that 55 handle, saying if it fades down into that 55, retest that 50-day moving average, coming into the previous high base breakout channel, acting now as support. I could see that scenario playing itself out in the short term. Whereas if we saw a gap and run up, I mean, what are we talking about? Let's wait for the next high base in a week and a half from now.
You're gonna chase Coca-Cola.
Not a
Bad
chance
idea.
not a chance in this world would you do that. And so I do like this reversal analysis playing itself out, and don't mind the fade down post earnings, as long as that 55, honestly, we're looking at 55.44. You look
Yeah.
at that 55 zone right where that 50-day moving average is. Keep an eye on that one. That could be a nice little pivot point for Coca-Cola post earnings on a positive earnings numbers here today. Let's move on to other staple giant, McDonald's here, MCD. Let's see how many of those. Let's see how much Coach Mark has helped in their revenue here today. Yeah, he helped quite a bit. 276 versus the expectation of 246. Nice little 30-cent beat on EPS numbers. Revenue came in above the expectation, 6.2 versus 6.1 billion. That resulted in 14.5% year over year. Very similar gap up following a strong earnings numbers coming out of McDonald's here today. Similar to what we just saw with Coca-Cola. Ty, do you see anything with support holding here and a little bit of a gap up, or is this just McDonald's consumer staples? Write some covered calls and enjoy the long term.
Yes, everything you just said. It's
Okay.
tough. I mean, tough
I
candle.
that's why I did it like that. Because sometimes I feel like, hey, let me throw it to you, Tyler, technically, but even though there's
No, you
nothing
nailed it.
there
Yes.
technically. So, all right, let's move on. Let's talk about aerospace and defense company Boeing here today with saw Raytheon RTX tie very quickly. Let's see a little bit of the good, a little bit of the bad, and a little bit of the in-between type Goldilocks analysis. Raytheon, really good earnings response, raw numbers earlier this week. Price response was down, trying to find that stabilization here today. Lockheed Martin said a lot of nasty things in their earnings response. You saw that gap down, sell down, just ugly, catastrophic gap there. Then you coming into Boeing here today, and Boeing has that muted response. So there is a little bit of hot, cold, and everything in between in the aerospace and defense sector here this week. It was one of those industries we were anticipating with some major names, and we have not seen consistency out of this in any capacity. Boeing reports a negative 60 cents versus the expectation of a negative 17 cents. Revenue came in underneath the expectation, 15.3 versus 16.5 billion. That resulted in an 8.1% revenue increase year over year. So there's a lot of bad in these raw numbers. We got a miss and a miss. So why not the Lockheed Martin? Well, one thing, if there is one thing to hang your hat on for Boeing, it is the free cash flow. They actually came in a little bit better from a free cash flow perspective. We all know fundamentally how important that is to, like Coach Greg when he's on Fundamental Focus. Stay with us tomorrow in the halftime report as we do another edition of Fundamental Focus. And maybe he'll talk about that free cash flow a little bit. But that was the lone bright spot for Boeing. Outside of that, this is a really negative report out of Boeing. Surprised we're not seeing a little bit more sell down behavior, but you're fighting against some support. Tyler, you got a technical read?
Yeah, I mean, I'm definitely liking these bear setups we're talking about. A lot of interesting bear ideas here. Boeing looks great as a short below this support zone if it breaks. I mean, it's textbook descending triangle. Major support zone here. You break that, you don't have anything till 195. Got a nice little $20 window or $10 window. I don't know. I can't do math. 10, 15, 20, one of those. You got a window.
It's a window.
Look, and rallies just keep getting sold, right? Like every time this tries to get off the mat, it gets whacked. So yeah,
well,
I think this has to go on your rare list.
And it's Boeing, so I think we're okay there too.
Yeah, it's not like this thing has bullish sentiment you have to fight against.
Yeah, it's Boeing. It's still one of the most disliked companies in the U.S. right now. They're still in a massive rebranding, and they are in a needed massive rebranding. But I will save that soapbox for a later moment. Let's take a look at General Motors here today. General Motors coming in at a very impressive 152 against the expectation of 107. But the problem here is revenue. EPS numbers came in just fine. Revenue was a big time miss, though, came in at 26.8 versus the expectation of 32.9. So you had a very mixed result here on an EPS versus revenue perspective. They did slightly increase guidance, though, however. And so it's a little bit weird one because typically I like to get raw numbers before I see price response on some companies, not every company. Most companies, like when they report the following, like tonight, I'll always see price response before I see numbers because I'll be looking at the charts. But when it comes to like in the morning ones, I typically will see the numbers before I see the price response. And with GM today, that's kind of how I took in the data is I saw their numbers and then I saw their price response. And I honestly thought we were going to see a muted price response given the fact that you had a beat on EPS, you had a big miss on revenue, but you also increased guidance. So I kind of felt like you would see this mixed result. A little bit of a gap down got me a little concerned here. Tyler, what's your read here technically?
Yeah, it needs time because this is the first time, think about this. This is the first time that GM has broken support since it bottomed
the reversal.
In August. Yeah. And so change in character, right? It's a change in character. So now you have to say, well, GM, you got to prove yourself to me now. We're on the outs. You're in a daily downtrend. You got to get back into an uptrend. That's going to take a bit. It's going to take a bit. So unless you're just a long-term investor and you are really hoping to get this thing whacked so that you can get a deeper retracement or something. But even then, look at the weekly. Like it needs time.
Yeah.
So maybe this turns out to be a weekly retracement, but I just think you need time. And typically, like, I don't know, even if it did fire back tomorrow, I'd still say, okay, give me a breakout. Like, I'm not going to buy it in the middle of this chop.
I'm sure there was a lot of traders, like Coach Mark will say, just give me bottom basement prices here.
Yeah.
But any technician, any investor, anybody looking to invest, they wanted to see strength there. Yeah. I just will not. In a market that is improving its condition, I'm just not going to buy anybody saying I want it to go down right now. We saw an entire market go down for an entire 5 weeks. People don't like that. They might say I want lower prices, but then when they actually see what that looks like, you don't want lower prices. I think you want GM was in a moment where they could have provided strength. That's what I think you're looking at. I think you got it right. Give it some time. Let this gap down work itself out because the first time you violate a support level after a reversal, I think you got to be concerned there. Whatever the catalyst is. And then let's end today's earnings roundup before we get into Jedi Options here on Spotify. SPOT, please. Spotify comes in at 48 cents negative versus expectation of negative 25. Revenue came in line, 2.9 billion versus the 2.9, increased 27.7% year over year. Reaffirm guidance. This is a very lukewarm earnings report, in my opinion. Saw a little bit of the monthly active users increase, though. So you got some good and you got some lukewarm and you got a little bit of concern. Overall, this feels like a doji to me type report. If I was gonna label earnings reports based on candles, which is now what I'm going to start doing because that's an awesome idea, I would give this a evening star doji type label here. It's got a little bit more of a, yeah, it might have an even star doji actually. But technically gap up over the 200-day moving average here, Tyler. I think that is notable. Also, the intraday is starting to solidify itself on the buy side as well. And I do think that is notable as well. Tyler, give me your read here from a
let me look at the daily
perspective.
first. So I feel like my context on these charts is always to look, the weekly actually looks okay, but I'm going to look at the daily for a second. I just look at Spotify and I'm like, I don't know when I ever would have really been excited to trade this. It's so messy. It's like Twitter. Like it gaps and it's volatile. It's just hard. And it's like, why are you doing this to yourself? You have better options. So I'm biased from the get-go when I look at this. That said, I credit where credit's due, Matt. It did put in a higher pivot low. It is breaking above a short-term resistance level. If I was going to be excited about Spotify, then this is the type of thing that would make me more optimistic. This is a great response. If I owned this, I'm probably very happy today with the response. You just still have a lot of overhead resistance that it's not out of the woods. But now to your point, this is where looking intraday, I think, is helpful because when you look at the daily, it's like, what the heck am I going to do here? It's
a lot of that is just on the cash open.
Right. So then you get that context when you go to the intraday, we'll go 15-minute, and you can essentially see, well, look, discount this wick here because that was just on the cash open. Mm-hmm. Actually, this intraday, to Matt's point, looks very constructive.
And that's exactly what I was looking
triangle.
at. Mm-hmm.
Yeah. So yeah, I think you're definitely more encouraged on the intraday than what the daily chart would have led you to believe. And that's a good lesson in charting and why you look
this is where my head's at with Spotify, and you tell me if I'm completely off base or if I'm onto something here. Fundamentally, this is not a good company at all, and I'm just spitballing my opinions here, but I can back it up based on some pretty traditional fundamental analysis as well. This earnings report is not an earnings report that I will remember starting in 2 hours from now. It was so forgettable. Like literally, Microsoft report, I'll be talking about Microsoft's report 3 months from now. I'll be talking about Google's report. If Facebook's miss, I'll be talking about that. There are reports that stand out to you and they stand out to you over time. Spotify, I've seen this report a million times out of Spotify and every other company that likes Spotify. It's a very forgettable report, quite frankly. Technically, you're absolutely right. It's typically a very choppy, tough read. A lot of tough reads here. But I like the intraday, and I like the gap up against the 200-day moving average. I like a quick trade here from 270, play momentum style above 270.
I 100% agree. And I think even, you're risking a couple of bucks if you do a tight stop or
it would be. It's day trade entry. Yeah.
It lends itself very well to a nice, pretend like it's Apple if you want to pretend like it's Apple. It's very constructive price action on the intraday chart. And even if it just goes back up to the high, 278, you got a nice little 2-to-1 reward to risk ratio there. So I like it.
Yeah, and again, you start getting into some pretty decent resistance at 280. So I think you are looking at 278 by 280 tight stop. I'm looking more short-term, very aggressive swing trade using day trade entry techniques, day trade stop loss techniques, play at momentum style. But again, it's not backed on the actual earnings numbers, in my opinion. I didn't feel these earnings numbers were gap up and stabilized, but that's what we're seeing. Yep. And again, My opinion is not more important than the market's opinion. The market gapped up, stabilized, intraday is forming. That to me is shows the market opinion more so than my own personal one, if that makes sense.
Well, and I would also add it held the old resistance. It became support, right? You got
Yeah.
the retest intraday to show that buyers showed up. So far, impressive.
All right. Well, that is earnings roundup, and it really is about a Microsoft and a Google day. A little bit of AMD as well. Did like AMD's report. So on the positive side, you honestly, there were two big dog names that we needed to see come through for this market this today. That was Microsoft and Google. Both Microsoft and Google passed the test. Now we got to see Amazon, and now we got to see Apple. We're navigating. And remember what I said earlier on literally Monday. This week is not a week where we're looking at, oh, how much money can the market make on the top side? This is really a week about stabilization at the top end of those charts, and getting through a week of major catalyst is really kind of that step one. We're halfway through, and so far so good out of the big dogs. And earnings have been a little mixed result this week so far, but the big dogs showed leadership, and that came from Google and Microsoft, because you're looking at a market little fade action here today. What do you think that market looks like if it isn't for Apple and Google's price action today?
No crap.
It looks a hell of a
It would
lot
be
worse. It would look a hell of a lot worse. And that is earnings roundup, and that's stocks in the news here today. Coach Tyler, we're going to talk a little bit about one of those earnings results and a little bit of how we can understand volatility and start creating trading strategies around those expectations for volatility. I know you got a good Jedi Options segment planned here for us tonight or today, so I will step aside and allow you to rock and roll and rock with Jedi Options, another edition of Jedi Options coming to you right now.
All right, friends, Jedi Options. Let me not bury the lead. We're going to take a look at Google, and the general concept here is trading a stock after earnings, trying to take advantage of a continuation of the volatility crush. Okay, so you come across this situation 4 times a year, right? You got your quarterly earnings. And often the question is, well, if a company reports earnings and it responds, the stock jumps up or down or whatever, how long do I have to wait before I enter a trade? Well, here's a situation where you can enter a trade the day after the earnings announcement, right? Google reported last night, or Alphabet, if you will. And today is the response to that earnings announcement. And I'm going to show you some analysis and a potential trade example on Google again today. So there's a couple of dynamics, I think, that you need to understand that support this particular trade idea. Let's start with the trade setup, the chart, build a technical case, and then I'll get into the option dynamics. If you take a look at the chart of Google, we've already talked about this company. Google's up, I think, like 69% year to date. Just bananas. Had a fantastic earnings report per Matt's earlier comments. But more important, maybe most important for me, is the technical pattern looks great. Google's been going sideways for 2 months. Recently tried to start an uptrend to get back to the upper end of the range. And you're seeing a potential breakout today on volume with good fundamentals that it's back. You can make a pretty compelling technical case. If you want to build it even further, you go to the weekly chart and you just say, hey, let's look at all these previous weekly breakouts. Show me when it was smart to bet against these weekly breakouts. Typically, you get follow through. Google has taught us again and again and again that you trade with the trend, look for excuses to buy versus excuses to sell, et cetera, et cetera. So I like the weekly pattern as well. I think you got sound technical footing for building a bullish trade. Now, what kind of bullish trade do I want to do? Well, in this particular situation, I'm going to err on the side of doing a high probability trade, a cash flow type trade, specifically designed to take advantage for any extra squeeze that's left in the what we call volatility crush. So you got to understand a little bit about how implied volatility works to get this concept of volatility crush. Conceptually, implied volatility tells you if options are cheap or expensive. And what you discover is over time, there's a pattern, a cycle that tends to play out around these earnings announcements, whereby options get expensive in anticipation of earnings, and then they get cheaper afterwards. And the logic here is pretty straightforward. You're willing to pay more for an option ahead of earnings because you expect the stock to move a lot. Earnings are catalysts that increase the actual volatility of the stock. And options are forward looking. They're smart. They price that in. People willingly pay more for calls and puts ahead of earnings. That manifests itself as a rise or an increase in implied volatility. So the general idea is IV goes up into the announcement. And then once the announcement happens, once the catalyst is come and gone, normally the stock reverts back to its normal movement, its normal volatility. There's no more reason to have these bid up option prices. So they get cheaper. They get cheaper. They go back to normal. And usually they do that very fast. If you think about it, the day before earnings, there's tons of potential for what the stock could do. The day after earnings, that's it. Cat's out of the bag. No more announcement, no more catalyst. So options rapidly go back to pricing in normal volatility. So you see this big drop in IV. So the cycle is a long build into earnings and then a crush afterwards, and a long build into earnings and a crush afterwards. Why isn't it perfect? Like when I look at the chart of Google, I don't see a perfect rise and fall every 3 months. There's a lot of messiness as well. The reason for that is Google is not trading in a vacuum. Google is influenced by broad market trends. So sometimes what the overall stock market is doing will trump that cycle. For instance, if the stock market crashes, even if Google doesn't have an earnings announcement coming up, options on Google are going to get more expensive because the market's going crazy. And so those exogenous events that have nothing to do with Google earnings and the Google earnings cycle can cause disruptions in the normal volatility cycle. This last quarter, the cycle played out fairly orderly. You can see last earnings announcement. Here's the volatility crush. Options getting cheaper after earnings. And then, 6 weeks go by, and then you get 6 weeks, within 6 weeks of the next earnings. And in general, the IV kind of works its way up until the next earnings announcement. And then it goes back down, right? So what we are witnessing today on Google is a volatility crush. Options on Google are getting cheaper as we speak because they're pricing out that earnings move. Okay, so I want to sell options because I think that this will continue. I think this crush could continue. Most of it happens overnight. By the time the market opens, they kind of price it out. But throughout the day the day after earnings, you continue to see kind of a vol crush. So, we're a couple hours into the trading session. I can tell you this trade would have been better this morning had we entered earlier, in part because the vol was higher and in part because Google was lower. And so entering a bullish trade earlier today would have been slightly better. Nonetheless, I still think we can build something here. So what is a strategy that allows you to profit from that vol crush? The answer is, selling puts or selling put spreads. Google's so expensive, we're not going to sell a naked put here. We're going to do a bull put spread. And one of the reasons why I think Google is well suited for a bull put in particular right now is if I were to build a bull call spread, there's not a lot of strikes to choose from. You have to do a 50-point spread. If I'm going to do a bull call above the current stock price, I guess you could do a 20-point spread here, but then it goes in $50 increments. So that's an expensive trade. When I look at the put strikes, they're every $5, which makes me have more flexibility in creating a bull put. And I was going to maybe compare doing November to December, but December options do not have $5 increments. When I look at the strikes that I need to build this, they're $50 increments. So that's a little bit too tough. So process of elimination, I think you have to build using November options, which are front month. And essentially what I want to do is I want to make a bet that this breakout sticks. I want to make a bet that today's rally sticks and that we don't go back below essentially today's low. Now, earlier before this session started, I was trying to get down around the pivot low, selling a bull put down there. But we've continued to go up so much throughout the day that I now have to lift that up a little bit and be more so around like 27.75 or so. So if you're willing to bet Google doesn't break today's low over the next, say, 2 or 3 weeks, this bull put spread will pay out. And essentially all I'm going to do is go as far out of the money as I can, but still get about a 10% return. So if you look at what's available, I want to be down around that 2770, 2780. The delta's around 13, 14, 12, somewhere around there. Let's start with a 2775. I'm going to sell that put, and then I'm going to buy the 2770. Now that's trading for 45 cents. I want 50 cents on a $5 spread. So I got to raise the strike price. I'm going to go 2780, 2775. It's 55 cents. Now, assuming I can get filled at 55 cents, because the bid-ask spreads on this are kind of wide. That's my little disclaimer for Google. Google options are a little tricky sometimes to get filled at. So if you're a stickler on liquidity, you might want to pass on this. But the more important piece to me is conceptually how we came to this conclusion, how we built the trade. You could apply this on other more liquid products. But to round it out, 2780, 2775 bull put spread, getting 55 cents. I don't really have the time to go through all the nuts and bolts of how a bull put spread works, but you're essentially risking 445 to make 55 bucks. You're going to drastically cut the risk though by just getting stopped out if Google breaks below 2780. And that essentially corresponds with, well, today's low is 2788, right? So you're about 10 bucks below today's low. And the two things that will help is, well, three things actually. If Google continues to rise, which based on the trend it should, you'll make money. If time just passes and Google just goes sideways, this bull put spread is going to make money. And more to the point of today's class here and lesson, if implied volatility continues to come down, that's going to shrink the value of these out of the money puts and push that bull put spread towards zero so you can more quickly capture that 55-cent gain. Okay, so to sum up, you got the implied volatility cycle. We're on our way down with IV. We're going to capitalize on the continuation of that crush. Admittedly, would have been better to have done this 3 hours ago, but I still think this thing will come down. I like the breakout. It gives me the confidence of leaning slightly bullish on Google, but I'm not going for the gusto with a bull call because I don't like the $50 increments. A little too expensive for my taste. So I think the bull put's the way to go.
Tyler Craig, another wonderful job on Jedi Options. Thank you so much for that. And you know, when you're doing live commentary and live content, Ty, sometimes price action runs a little too much to make the example perfect. You know, when you and I were breaking this down literally before the halftime report, man, we were getting underneath support, but you know, price action does occur. The important point here in this Jedi Options segment is what we're trying to take advantage of. The volatility cycle, the volatility build that happens for weeks coming into earnings. Well, as markets go up, it typically takes a little bit more time for markets to go up than it does for markets to go down. But when volatility starts going down, what takes weeks to build typically takes a few days to come down as well. Day one of the earnings volatility crush is today. It's being priced in. It's going to take a few more days. We can still take advantage of that, especially now knowing the price response to the volatility event, which was earnings. That point, very well made, Tyler. Thank you so much for another wonderful segment of Jedi Options. And that is it for the halftime report for today. Coach Tyler, fantastic job. Final thoughts to you, sir.
Yeah, let's see how this pullback. The most interesting thing for me is the pullback you're getting in the previously leading sectors: energy, financials, small caps. If this plays out like it should, the dip gets bought. And hey, Matt, you know, if tech wants to join the party, that'd be great. Let's get a party. Let's get tech. Let's get financials. Let's get energy. Let's get small caps. Let's rock and roll for the next 2 months. Give me my small cap breakout, and we'll button up a good year.
And honestly, Ty, that's what's been happening the last 2 weeks. Most sectors have been starting to improve. Now we're seeing the separation. Very important next week in the market as well. Stay with us as we break it down every single day in the halftime report. And for tonight's programming, we do have another edition of Trade Masters coming later on tonight. I believe, Coach Tyler, you're there tonight, right?
I may or may not be defending
And
my title.
you are
Yeah.
defending that belt against the challenger, Coach Emily. Emily, I talked to her earlier today. She is looking to take down the king here, Tyler. She wants, she knows she's going to bring the heat, and she believes tackle is going to be behind her. You better bring it as well. And while you guys are on the YouTube channel tonight, 7 p.m. Eastern Standard Time, I'm going to be hanging out in the Tackle Trading Discord channel, and I'm going to be hanging out with a bunch of Tackle Trading Pro members. So if you are a pro member, you want to hang out with me watching Trade Masters tonight, typically we all kind of be quiet. Last week was our first time, Ty. We kind of be quiet while you guys are talking, and then I'll bring in some of my thoughts towards your trades, and we're trying just to make a very fun, live environment where we just get to hang out, watch you guys do your mastery on Trade Masters. So come hang out with me in Discord while we simultaneously enjoy Trade Masters with the coaches here tonight. Until then, we're out for tackle trading. Thanks, guys.
Yep. See you, everyone.
Like and share. Tim would kill me if I didn't say that. Like and share. Like and share. I like it.
Apparently they didn't like and share.
Apparently, yes,
they
haven't
needed
liked
you to
share.
ask them one more time.
Yeah, 10. Take us off. Take us off YouTube.
Hey, in the event this goes on for another 5 minutes, I do have a.
Well, and it may go on. I don't know what's going on.
Listen, my wife and I watch This Is Us, and
how is that?
One of the characters is